Well, what do we got going on in the OTC world, Haas? You got a spotlight for us that's gonna blow to the moon again?
I don't know if this one's one that's going to blow to the moon overnight, but it's definitely a what I'd like to call a longer term gem in the over-the-counter market.
Longer
Is that
term
okay?
jam. Nice.
Yeah, they actually like have some real stuff going on instead of a bunch of like hype and bullshit.
Hype and bullshit. Never heard of that before in the OTC market.
Yeah. So, all right, I'll just roll with
Good deal.
this. Yeah, usually, we're presenting a lot of companies on this show that have been quiet for 2 years, or they get some new management popped in place, and they have all this great information about how much revenues they're going to bring in like 5 years from now, right? So basically, what we like to call a pile of shit that they're trying to make sound good. But some of those present some pretty good trading
Gotta be
opportunities.
kidding me. Who the hell
Companies
told us to
on the
buy that
verge of
piece of
changing a
shit?
business direction, or something like that. They start talking a little bit, and they just kind of come out of the woodwork, and people get interested in that. Starts building some hype and speculation about what's to come. This is a completely different beast in itself. The company I want to talk about this morning is Coda Octopus Group. The ticker is CDOC. We have actually talked about this one when they popped out their last financial statement back in March, because it was quite an appealing financial statement for a company trading in the over-the-counter markets. And before I start on this, just give a little shout out to Over-the-Counter Bargains on Investors Hub. He tipped me off on this one, I think back in like February. It might have even been January or something. He said they were going to put out some banging financial statements this year, and they have put out nothing but banging financial statements so far in 2012, which we're going to go over in a second. But he's out in California, and I didn't want to make him wake up super early to come on the show and present this one himself. So I told him I would go over the financial statements and give a little general business update on this sucker this morning. So kudos to Over-the-Counter Bargains. He's really good at finding these undervalued plays in the over-the-counter market, and believe it or not, there are a couple of them out there, and I think he's pretty much got every single one of them picked out. So if you're interested in those types of longer-term growth plays that actually have some revenues and net profits, he's a good guy to talk to. All right, let's get into this. We're going to start off on Didi Amanda, which I always like to start out, just because. All right, and as you can see, there's a really low amount of, not necessarily interest, but dollar volume traded in the stock, other than around the financial statements. So that just gives you some light into how good these financial statements and numbers actually are. Basically nothing traded. And back in March, when I mentioned that we first talked about this one, you see a couple of higher volume days here in the $50,000 range. And that's when they put out their last quarterly statement. But this quarterly statement that they just put out in June generated a lot more interest than the last one. It's just showing how much they're growing. We have $174,000 traded on the 15th last Friday, and a solid $100,000 traded yesterday. So a couple of big fat green candles here as this thing's been trekking upward from about 6 cents to 8.8 cents close yesterday. So definitely some interest there and some eyes moving that way, checking into this company a little bit. All right. And before I get into the actual financial statement itself, let's go to their website, because let's get an idea of what these guys do. Coda Octopus Group Incorporated, basically these guys have a bunch of subsidiaries that use different types of underwater sonar products and technologies, which can basically be used in tons of different fields. Think, Navy, different types of motion sensing, even like oil and gas companies doing some underwater exploration, marine geophysical surveys, 3D sonar technologies. So just tons of different uses, and some pretty cool stuff if you think about it. And if you go and check out this website and check out their products and services, they have all these different subsidiaries, different types of products that you can check out. that they're using and currently selling very successfully. And just some really cool stuff. The main product that they rolled out more recently is the EcoScope, and we've mentioned that one on the show before. But that's their main underwater, 3D sonar technology product, where they're making some banging sales as of late, which we'll go over right now, actually. So let's move over to the pink sheets. As I said, this one closed at 8.78 cents yesterday, which was up another 12.56% on pretty high volume, 100,000 bucks traded. Business description, recognized internationally. Yeah, that's another thing. They're not just in the U.S. They got subsidiaries overseas, too. Internationally, is a specialist in underwater technologies for imaging, mapping, defense, and survey, and is a leading supplier of geosurvey solutions. Its real-time 3D imaging product, EcoScope, is leading-edge technology for port and coastal asset security, defense, security, and oil and gas applications, revolutionizing the capture and visualization of subsea data. This is where you start getting into the cool stuff, thinking about, the Department of Defense, the Navy using this product to, scope out whatever they need to scope out. So there's a little bit of a sexy spin to the company and their product, too, that you can throw in with the awesome financial numbers, which I always like. It's some of these companies that actually have good financial numbers that don't really have a sexy product. Who gives a crap? Who wants to invest in that, right? Very current share structure on pink sheets right now. These guys are good at putting out their quarterly reports, keeping investors updated on the share structure. Shares outstanding, just under 75 million, sitting at about 74.5 million as of June 15th. Float is about half that, 35 million shares, so a nice, very nice share structure. Authorized share count, 150 million shares. So as of the close yesterday, we're sitting at a market cap of about 6.5 million US dollars. So good stuff there. Very updated pink sheets information. Always like to see that. And let's move over to the most recent quarterly financial statement. What's causing all the interest and dollar volume coming to the stock as the share price has been bumping up pretty significantly over the past couple of days here? Let me take a deep breath. Sorry, I'm out of breath this morning. I don't know why. Whatever's going on, maybe the air's a little bit thin. All right, moving through this quarterly financial statement, there are a couple of very significant and key points that I want to point out. The first thing that I want to mention is we always like to get an idea of what sort of dilution has been going on with the company over the most recent bit, right? Well, these guys have basically gotten to a point where their cash flows and revenues are increasing to an extent where they don't have to dilute anymore. October 31st, 2010, we see a share structure of that 60 million. And then a year later, October 31st, 2011, we see 74 million, so about 14 million shares of dilution over the course of that year. And then from October 31st, 2011, about 6 months later, April 30th, 2012, that share structure is pretty much the same. Maybe an extra 100,000 shares or whatever. And then we see in the most recent quarter, they haven't diluted at all. Exact same share structure. And as we'll mention a little bit when we go over some of the actual numbers, they've gotten to a point where in 2011 they were operating at a net loss to operating at a pretty significant net profit right now, which gives them the cash flows they need to do everything they need to do without having to raise cash on the open market. So very significant little bit there that dilution, in theory, has stopped for a little while here, barring some sort of significant expansion with their product lines or research and development. But very positive note there from the financial statement. Definitely a key point to keep in mind as you're going through the rest of this stuff. Let's see here. Another thing that I want to talk about are recent developments. Yes. All right, let's go over some of this, just to kind of get a brief history of the company and what has happened over the past couple of years that has really changed the entire look of this company. Since the group became a public trading company on the pink sheets in 2004 and moved its headquarters to New York in 2005, it had reported continuing and significant losses. Sorry, I should have read this a little bit first. Our group has been the subject of restructuring since October 2009. That's a very key point. So around 2000, as of 2009, during this restructuring process, a new senior management and board were put in place in September of 2009 to address the losses, other historical problems of the group, and to ensure its continuity as a going concern. Since September 2009, the focus and strategy of the new management has been to restructure the group by negotiating the removal of certain barriers to new investments, so basically toxic debts and different types of shit like that, reducing the group's cost base significantly, so improving their net margins on operations, simplifying the group structure, which basically means firing the people they don't need, restructuring some of the group's debts, already mentioned that, taking the business to sustainable growth and profitability. Basically this old management, they were taking too high salaries. There were too many people involved that they had to pay that they didn't really need. And so new management comes in, completely revamps the company, takes them from operating at significant net losses to operating at high profitability, and growing and increasing their revenues at this point quarter over quarter very significantly. So the new management that they put in place, very good choices, in my opinion, as we'll see in a bit here by looking at some of their actual numbers. This little chart right here outlines this pretty well. In 2007, 2008, full fiscal year, selling general administrative expenses have gone all the way down from 13.2 million in that 2007-2008 to 2.4 million in 2011-2012. Significant reduction in SG&A over the last several years, and even as much as half from just the previous year in 2010-2011. And revenues also going down. You're going to see a decrease in revenues anytime you see that much of a decrease in SG&A, from 17 million to 9.6 million. But the key thing you have to keep in mind is this ratio right here. What is the percentage of selling general and administrative expenses as a percentage of revenues? And that has gone down from 78% back in 2007, 2008, all the way down to 25% in the current previous fiscal year here. So very significant reduction there. Very positive for shareholders as they turned into what is now a profitable company with significant revenues. So I don't know if these guys were writing some fat bonus checks or what, but I wouldn't have minded being some sort of board member during this 2007-2008 fiscal year and getting some fat bonuses written every single quarter as my shareholders looked at us like, what the hell are you guys doing? Anyways, so very significant reduction in SG&A as they've been increasing their revenues. All right, let's go look at some actual numbers here. Roll down to the actual balance sheets. Sumo doesn't like it when I hum, Stiffy, but I gotta fill the time with something while I'm trying to find the actual numbers that I'm looking for. So, and he's not here. He's hacking away on the golf courses.
Hum away, hum away.
Yes, that's what I thought. All right, we're down to where I want to look. I hope it shows up large enough on our actual screen to where people can see it. But for the 3 months ended April 30th, 2012, net revenue $5.5 million. Very significant for a 3-month period, and that's up about just over $2 million from the previous, or from the 3 months ended April 30th, 2011, up from 3.2 to 5.5. So very significant increase there. I'm guessing somewhere 80-90% almost. Gross profit on that, 2.8 million. But the key number that I always like to look at is the net income or loss. And we're sitting at a net income of about $950,000 for just this previous quarter here. So they've turned to profitability here. As you can see, back for the 6 months ended April 30th, 2011, they were operating at a net loss of about $500,000. And just this previous quarter, they became pretty significantly actually, no, this is 6 months, this is 3 months. So basically from breaking even in the 3 months ended April 30th, 2011 to almost $1 million in net profit for this quarter in 2012 here. Very significant change in financial aura about this company over the course of the last year even, and that's not to mention over the course of the last couple of years as they put that restructuring process into place. But right here it mentions a net income of 1 cent per share for this previous quarter. I think they actually rounded that down. Let me check here. I know Over-the-Counter Bargains gave me some information. He's a number guru, kind of like I am. I haven't pumped out the actual calculations. Let's see here. 5.5 million revs for this quarter, beating previous years by 3.1 million handily. Rapidly increasing net profit of $944,000 for the quarter, or 1.3 cents earnings per share. Annualized, that is 5.2 cents earnings per share. So we got about a 5.2 cents earnings per share right now for this company on a forward-looking basis. You pop in a price to earnings ratio, which is a fair valuation measure, of 10 for this company. We're talking about 52 cents for a fair valuation share price on this company. And that's just a PE of 10. PE of 20, we're talking dollar land, which isn't out of the realm of possibilities. A lot of these more micro-cap companies that are on significant growth curves, a better ratio to use sometimes is actually a PEG ratio, price to earnings growth ratio. I'm sure some of you heard about that. And usually that pops up, that just factors in the growth rate of the company. And usually that ends up in being a higher share price estimate for some of these smaller companies that are expected to grow significantly quarter over quarter, year over year. So we're talking significant undervaluation based on fair valuation measures for CDOC right now. And, you know, they're only improving their net profit margins right now, so it's going to be very interesting to see how their revenues grow and their profit margins pan out over the course of the next year for sure. But very significant numbers, very positive numbers, and a very cool company. One thing to keep in mind, as we've definitely mentioned already, is, you know, this thing's sitting on the over-the-counter markets right now, so fair valuation measures don't come into play too often, and when they do, sometimes you're going to find some very large discrepancies in what a company should be trading at based on fair valuation measures versus what it's actually trading at. So not saying that this thing is going to be trading at 50 cents next year even, but this company is definitely on the right path to increasing its share price, and it's not a short-term flip play by any means. This would be more of a longer-term accumulate the dips play. But before we move on to some other stuff, I definitely want to take a look at this chart. Good to take a look at a shorter-term chart and a longer-term chart, as this company's been making changes over the course of the last couple of years. So, Siffy, are you able to pull that up this morning?
Yeah, we got that chart. CDOC. We're going to start with a daily here. Daily 1 year. You can see where she had this big run. I think it was March 27th, March 28th. Hit a high of 12 cents. So keep your eye on that. And then you see right here, just on Monday, June 18th, you got a high of 11.5. So lower highs. Hopefully that's not a double top there, but Haas is claiming long term. I'm claiming long term. We're through the 20 MA. We're through the 50 MA. I never like to see big wicks like that. You can see your MACD. It's rolled over. It's crossing. It's heading north. It's up through that overlay. Not the overlay, I'm sorry. The histogram. Your slow stow, it's down a little bit. Had some massive volume in this thing, but yeah, let's check out a weekly, see what's going on here. since we're going longer term on this. Oh, there we go. You can see she's broken through the 200 MA, and again, highlight the little double top we got going on right there on this last swing. But the indicator's looking good. The slow stow, it's crossed up, it's headed north. The MACD's got a nice positive divergence going on. It's through the histogram, and it's heading the right direction. I do like that you got all your moving average, your 20, your 50, your 100, all below you. That's what you like to see. Solid base. So you got candles, you got moving averages to refer back to, and I like the chart on a weekly, man. This thing definitely could be a breakout. So good one, Haas. I like it, man. Good deal. Let's see where she's at in the next. What do you say? Coming quarters? 1, 2 quarter? 1, 2.
I'd like to see where she's at the end of the year.
End of the year. Let's see where CDOC at the end of the year. Keep her on the radar. Coda Octopus Group.
Definitely a lot. Again, this one was brought to me by Over the Counter Bargains, so I gotta give him a shout out. He loves these types of plays, and I actually do too. It's always nice to see a company that's bringing in some nice big revenues and still maintaining profitability, even at these lower 10-cent micro cap style companies. So yeah, there are some real ones out there. Believe it or not.
That's cool. Got to always give the shout out to where the shout outs do. So
oh, for sure.
Nice one.
Yep. I was trying to encourage him to come on the show, and we've been hacking out the night show for a little while, other than CEO interviews and specific stock spotlights we need to hit on, but I didn't want to make him wake up, wait a second, you wake up at like 3 a.m. every morning.
What time is it? 3 a.m. What the hell am I doing?
I should have just given him a little extra kick in the butt, but I don't know. Hopefully he's not disappointed in my presentation.
I think you did a good job, man. If he didn't like it, he can come on and redo it.
That's right. I read his little bit, so. Kudos to Over the Counter Bargains, CDOC. Keep it on watch over the course of the next year or so. It's kind of scary to think that long, but.
Yeah, well, at least our stock market's looking pretty